weekend all. Ira Epstein of Linn Associates with your agriculture wrap-up for this weekend edition on Friday, the 8th of November, 2019, and we're after 3:10 in the afternoon, so they're still trading in stock indices and the like. The interesting day in grains today, of course, was the USDA crop report, and let's go to that before we get anywhere, and then I'll talk a little bit. But the corn harvest acres, well, they came in at 81.815. They expected 81.5. The production number came in at 13.661 billion bushels. They expected it 13.6. And the corn yield came in at 167. And that was the interesting part. It was a half a bushel less than the estimates that were out there, and it's about a bushel and a half under what had been done before. The harvested acres for soybeans, 75.626 million acres. They expected 75.4, so that was a little bit bearish. Then if you look at the production, 3.549 billion bushels. They expected 351, so that was a little bit bearish. And then the yields came in right where the market was thinking, actually a little bit of an increase if you look at it, about 0.3. So at the end of the day, you were down 5.5 in the beans, corn up a little bit on that news, but really nothing moving very dramatically. Energy markets all over the place. I always mention energies because you look at these things, and in order to get the corn and all done, you look at energy prices because you do have to dry a lot of these crops out before you store them ideally. So you don't want to get the rot in them and so on. So I look at natural gas and see what's going on. And speaking of that, because we are in the weekend edition, come Monday, it is Veterans Day. I will be here. We are all working. The important thing is we're supposed to see in the U.S. upwards of 170 new record lows made on Monday, so that Canadian cold air is really moving through. The interesting thing to me was you weren't up that much in the nat gas. Markets that don't react bullish to that could do it on the morning of it, but you start looking, maybe the market's getting a little rich in price. Now, the weekend edition, we're going to look at one monthly chart, and then everything else is going to be the weekly charts because we're trying to look at the bigger picture that's going on. You know about President Trump saying no, he hasn't agreed to any tariff rollback yet, and of course he's going to say that. We learned a lesson in May. You can't forget it. We thought a deal was done with the Chinese, and what turned out to be the items we thought the U.S. side had been agreed to weren't. And the Chinese taught us a lesson. They said, until the deal is done, even though we may agree to certain things, because we didn't agree to everything, we start from scratch. President's talking that way now to them. Until it's all on a piece of paper for phase one, we learned it's good enough for the goose, good enough for the gander. And I think that's the way that you look at it. So as we come to the monthly chart, you still haven't gotten back under these monthly 18-month moving average of closes, so you've got an upward bias in the market. The question is, can it hold on without getting something in the demand side from this market? When we look at a weekly bar chart, you can see how the market got up here into the 940 area. It's given some of that up, and now what you've got to be worried about is not this week's low, but I think last week's low. And if last week's low, and that low was at 910.5, you could end up with a pattern when you come to the swing lines of lower highs and then a lower low. I'd look to see where the 18-week moving average is. I'll put that on. So right now, here's where you're at. The market, when you just look at a weekly chart, you have the pattern of higher lows, higher highs. That's bullish. If you take out 910.5, you break that pattern, but because you're over the 18-week moving average, you have upside bias. And notice where the market's stalling on this first run. It's stalling back at the 100-week moving average of closes. So going home, I think the traders would look at it, take the name of this off. You're still in an uptrend. You have upside bias on this. The resistance was the upper Bollinger Band. The market spent 3 weeks fighting with it, couldn't do anything, fell back to the 100-week average, still not under it. Get under that and get under this 910.5, well, then I can argue maybe you're going to make a move for that 890 area, and that would end the uptrend, but it would not start a downtrend. So that's what I'd be looking at through all that. Sorry about that. Now let's take a look, if we could, at the weekly with the slow stochastic, because this is your momentum. Momentum has not turned down. Momentum is still up, going sideways here. We've got the higher lows, higher highs. We've hit upside objectives. The number not to take out, in my opinion, is 910.5, but that doesn't turn me bearish. It takes me as a chartist out of the bull camp. In the meal market, you've had a pattern of higher lows, higher highs. You pulled back this week, challenged that line in the sand, as I like to call it. And, you know, I think this 18-week average is so important on markets that it came down there, hit it, and for the week we were up $1. So if we look at last week's high was 306.60. This week's high is 306.40. It was not an outside week up or anything like that. Therefore, I still look for support at that 18-week average of closes. If the market settles underneath it, then you've got negative bias. The key for the bulls is to keep that there. Where's the resistance in the market? The upper Bollinger Band at 314 to 322.40. So these charts, as much as the daily and you look at the crop report, not looking as bearish as some of those numbers. The strongest part has been the soy oil. And you can see how that market's been running, got back under, over the upper Bollinger Band. And this week it's back over 31.50s, where it's at 31.36 is that number. Now last week the market finished at 31.03, so you were up over it this week, that week. Here's another week you look to see where were you, 30.96 compared to that. That's 3 weeks in a row. This week you finished at 30.36. That's 4 weeks in a row. And right here, you were basically under it. So we're at a point, that's what I'm trying to show, where you typically don't go 5 in a row. And I'd be a bit cautious here that this market wants to pull back a little bit. Am I bearish? No. But I think it's going to try to get under that Bollinger Band and finish out the week there. In the corn market, I still see a bearish trend. I still see lower highs, lower lows. The market had challenged a month ago the upper 18-week average of closes, fell back this week, found support at the 100-week, bounced a little bit, and it's in between these two numbers. So I still see the trend is down. I think the bears will defend their position or try to at 386.75 if you get a rally there. I don't think they'd want to see 402.5 taken out. If that happened, you could change the whole picture here. But if this market, let's assume it doesn't even get there and it starts settling under that 100-week, between there and the 333 level, there's just open ground on this chart. In the wheat market, this has been the most favorable of the markets. It's had a pattern of higher lows, higher highs for quite a while. The pullbacks haven't violated the 18-week average or the 100. What you don't want to get under is last week's low. That was 501. If you do that, you can end up with a pattern of lower highs, then a lower low, and if you closed under these numbers, you're bearish. So that tells me that the bulls are going to try to support that. You are in an area here where the momentum has flattened out. I don't consider on weekly charts whether a market's overbought or oversold. On the weekly, is the momentum up, down, or going sideways? It had been pointing up, and you can see very much how it's drifted sideways, and you're seeing that in price action. Resistance, 539.75. In the cocoa market, cocoa on the daily charts is a mess. The weekly charts aren't as messy, but they're still not trending. You have a higher high, lower low pattern. Momentum is up, bias is up. To get this market saying, maybe I've got something else going on, I don't know what you could do. Because the pattern's a lower low and the higher high, I don't see a trend out of this. In the sugar market, the market fell back today and then recovered on the intraday chart. The trend remains on the weekly chart to the upside. You've got the higher highs, the higher lows. The market's stalled at the 100-week moving average of closes. If it can rally here, then 12.99, the upper Bollinger Band's the next resistance. A move back under 12.05 with the close under 11.83 would turn this chart bearish. So that's how I'm viewing that one. coffee. It's taken a while, but the market's gone back up to the combination of the 100-week average in green and the upper Bollinger Band. Now, these are the areas this market often fails at. So I'd have my warning signs out there. Momentum up, trend up, but you're in a very strong resistance area. We'll see if the market can do anything with that. I'd be surprised if the pros aren't coming out of a bit of positions. In the cotton market, you've got a lower low, higher high pattern, and you're drifting sideways against the upper Bollinger Band. For the week, you gained about 40 cents. Momentum is still up on the market. So bias up, void of a trend, can't even get one. Because you broke down the way that you did, even if you took off to the upside, you'd have a lower low, higher high. I don't see anything there. Cattle market's still bullish. It is riding that upper Bollinger Band. You get over it and you pull back slightly to it. You finish this week at 119.25, and the upper Bollinger Band's 119.47. That's called riding the band, and you've got momentum still pointing up. This is still a bullish chart. That cold weather might impact some of these meats as well. Now in the hog market, with all the talk of the U.S.-Chinese Phase 1 getting done, the hogs this week are down 32 points. It's not a good sign. Markets that you'd expect to go somewhere and don't do it, you got to be worried about. In the current pattern, as I'm looking at the chart, you have an outside week down. This week's low took out this previous week. Unless this week's high, that's the right way to say it, unless this week's high is taken out, I think the bears grabbed control of the market now, and if they can push it under this 60, let's call it this week's low of 63.37, I'd be very careful here, because between here and this lower Bollinger Band is a vacuum. Admittedly, you've got the support through that. That is the key to this market. We'll see what it does. What would bother me is taking out this week's high, as I said, but even then, you don't have the right pattern of higher highs, higher lows. So I look at it all, trying to figure out what to do with it, and one of the things I do is I look at the charts and I say to myself, let's see if I can get this going for you. There it was. How do you play with them? And what I do each morning for my subscribers, and being on YouTube is not one of my subscribers. That's a subscriber on YouTube. It's free, as you know. But in the morning, 5:30 in the morning, I'm ready to record. And I record typically a 20-minute video that I get starting on just before 6 a.m. It's out somewhere around 6:30 a.m. That's Central Time to 7 o'clock. It depends how much editing I have to do on it. It's 40 charts on futures, 5 on ETFs related to the futures markets, and the charts will look like this. They're going to have more moving averages. I'm going to do technical and fundamental analysis for you. So in the morning, like you're getting these talks out of China, my clients know what I'm talking about first thing because I've already looked at Asia's take on it. I've looked at what's going on in Europe, and then I'm looking to see what reports are out for the morning as we're going, and I'm reviewing them with you. So I give you a list of what's going on there. I will give you specific entry, exit, profit objectives, stops, obviously. What do you do with the market? That I will do. More times than not, you're going to hear me give you a reason not to do something. People will ask me, is it all short term? It is not. Give you an example. We have on right now an S&P trade. I think it's 2 weeks old. So no, it's not. And these are the markets I cover in this exact sequence, and there's a scroll bar on the bottom so you can go to the area you want. It'll light up and tell you what area you're on, and we include with all this just what you saw. When it was rude of me to not have turned this off, my phone will be here, and I've got the quotes and all. You get this. It's a $40 a month value. We throw this into our subscription price. Why? Instead of sending you a text message when the video is ready, I want to send you a push notification. You just hit it, it's going to light up and play right within the software. You don't have to do anything. You can see how that part is working for you. You got quotes. You got all our news coming in through there. That's what a lot of people like. Now, we have different levels of our subscriptions. This is the least expensive, 26.5 cents a day to give it a try. You'll find that you can do commentary with videos, commentary by itself, the morning video by itself, or the whole package where you're getting my trade recommendations and the other part. And folks, I do tell you after the fact what I did during the day on trade recommendations, and that's because I only put this out once a day in the morning. We're also thinking of putting out maybe one of these that's a little longer term, where I give more information in it. That would be included in the video package as well. And as you know, I'm doing special reports. I was going to do one today, and very frankly, I just didn't get to it. I'll get to it this coming week. And those are included. Very certainly, we're going to monetize those. So just go to our website, www.iraepstein.com. Under the word research, it's all explained there. You can click up here to get there as well. I'm Ira. You have a good day, and I'll see you tomorrow.